Homebuyers, are you wondering what the conflict happening thousands of miles away has to do with your ability to buy a home right here in the United States? Well, the connection is much more direct than people realize, and understanding it puts you in a much better position to make a smart financial decision. So, let me explain how it works. The conflict with Iran has pushed oil prices higher. When oil prices rise, the cost of transporting goods goes up, and running businesses all goes up. And that feeds directly into inflation. When inflation rises, or even when the fear that it might rise comes, the Federal Reserve holds off on cutting interest rates. And here's why that matters to you specifically. Mortgage rates had briefly dipped below 6% for the first time in over 3 years. That was a meaningful milestone, and it brought tons of people back into the market and created some real momentum. And then overnight, oil prices spiked. Inflation fears returned, and up goes our mortgage rates. Costs went back up. The mechanism behind the move is the bond market. Mortgage rates follow the 10-year Treasury yield very closely. When investors get nervous about inflation, they sell bonds. Bonds are basically a long-term investment, and anything inflationary is the enemy of bonds. So when bond prices fall, yields rise, and when yields rise, mortgage rates rise with them. So the sequence looks like this. Oil prices go up, inflation fears increase, bond yields climb, mortgage rates follow, and your monthly payment goes up. Now, this is not a story about politics, but it is a story about how interconnected our global markets are and how quickly something happening overseas can show up in your housing payment. So what can you actually do with this information? First, you can understand that rate volatility is real and build that into your planning. Do not assume the rate you see quoted today is the rate you will have next week, next month, or in 60 days. Second, speak with your loan officer about rate lock strategies. Depending on your timeline and your risk tolerance, there are options to protect yourself from upward rate movement while you are shopping for a home. Third, explore seller-paid rate buydowns. In a market where sellers are already making concessions, you can negotiate for the seller to buy down your rate at closing, which offsets some of the impact of rates moving higher. The buyers who get frustrated right now are the ones that are watching rates like a scoreboard and waiting for the perfect number. The buyers who win are the ones who understand why rates are moving and plan around it and use every available tool to make the deal work. If you want to talk through your current situation, what current rates are and mean for your specific budget, and how to structure your purchase to protect yourself from volatility, send me a private message and follow me, because when the market shifts like this, being informed is the biggest advantage you have.